income from other sources. Dividend income. Say we will take up deemed income now itself, no big deal. So we will finish off. What is deemed dividend? On the other day I was just making a reference about deemed dividend. Now we will start a new discussion. See, all these proprietors and partners, when they were carrying on this business, there was no discipline that they have maintained. In the sense, whenever money is required for personal purposes, they will withdraw from the firm and use it for personal purpose, and they will not have any inclination to put the money back. Because for a salaried person, salary is going to be his source from which he will be living. And for businessmen, there is no salary he will be drawing. The profit he will draw, and that is what he will be using it for his personal living. Correct? Once his business is converted into a limited company, then the tendency of drawing cannot be reduced. There will always be continuous withdrawal he will be making. But this is nothing but out of profit only he is drawing. And every month the company cannot be declaring dividend. There are only 2 times the company can declare dividend. What are the 2 times? One is interim dividend, the other one being final dividend. So monthly dividend is not possible at all. So what these people would do is that they will not debit dividend account. Rather they will put it out as advances. Or they will create in such a fashion that the shareholder who had invested the money, he is gaining at all points of time. Firstly, we will take up 2 subsection 22 clause A. That is what they have just referred in the first case. Come on. Distribution of accumulated profit entailing the release of company's assets. Come on. Can one of you read out? A. Okay. Now I will put it this way. If Dayanidhi Maran is saying that he is not owning a very costly car, he is projecting himself when he is filing the nomination, when he is applying for being a candidate in a electoral poll. He says that he is not owning, but you find him using it. How this is possible? See, one of my friends by name Venkatravan used to ask a lot of questions like a layman. See, tell me one good reason as why Dayanidhi Maran is telling that he is only a poor fellow like me. So, he is declaring such an amount of asset where it is lower than what a businessman would be owning. So, tell me one good reason as how and where his earnings were all hidden, is what he used to ask. As a chartered accountant, you tell is what he will be contesting. Very simple matter only. He is owning a company. Company will be owning the asset. On that particular asset is coming and going. Matter is simple. He would say it is not there in my name. That is what he will be telling. He will not tell this company is owned by me and the company is owning this asset. Therefore, I am traveling in this particular car. He is not the one that he is going to tell to all. Are you understanding what I am telling? So, if I want to meet some expenditure, I want to buy a car. So what I will do is that I will ask the company to buy the car and I will use it. No, who is going to ask all this question? But if that car is given to me, then the section 2 subsection 22A will come into operation. Look into the case. Distribution of accumulated profit entailing the release of company's asset. If the asset is there in the name of the company and is being used, nobody will ask a question. If that particular company's asset is given to the shareholder, then the distribution of company's asset to a shareholder will be considered as dividend, is what they are telling. So fools only will transfer the asset of the company to the shareholder. So those who are very intelligent, what is it they would be doing? They will not transfer the asset to the shareholder. It will be there in their name and they will use the asset. Nobody can ask you any question. You can very well go to a cinema, very well go to temple, very well go to coaching class, very well you can just take it to the beach and roll your glass off, roll your glass on and enjoy the times. Who is going to ask any question? Only when there is a release of assets, only when it is transferred, then problem will be there. So why these people were not caught is that they have studied income tax well, or they were taking, there is advice from those who studied income tax well. Who were caught? Those who are not attending to class or not getting a good advice. Correct? No. So therefore attend to class on all times. Because we miss those classes. So we get an opportunity to give a good advice to such politicians. So this is first one. Are you understanding? Only when asset is transferred, if the asset value is 40 lakhs and if the company's accumulated profit is 10 lakhs, if the asset value is 40 lakhs, accumulated value of the profit is only 10 lakhs. Only 10 lakhs will be considered as deemed dividend. Supposing the value of the car is only 2 lakhs, let us assume 2 lakhs, and the accumulated profit is 10 lakhs, 2 lakhs will be taken up as deemed dividend. So you can say value of the asset or the accumulated profit, whichever is lower, will be considered as dividend. Next. Right. Are you understanding what is happening? So, to the preference shareholders, if the company were to give debenture certificate, debenture deposit certificate and bonus to shareholders, which is not at all a practice in corporate world. Supposing if they invent an idea, say for example, how to divert money, the company has got money, and I just find a preference shareholder is there. Tanga Kalishwaran is a preference shareholder. To him, I am just saying, I am issuing debenture to him. By debiting the reserves, credit is given to debenture. Okay. Now debenture becomes a liability. Then I will be telling, oh, debenture is a liability, I got to pay. Debit debenture, credit cash. You understand as how money is being siphoned out from the company? Reserve account debit, credit debenture. Debenture account debit, credit cash. Cash is withdrawn and it is not coming through profit and loss account. So these sort of practices people have just made, and to plug that particular practices, they have introduced all this. But it is not a new section, it is a very old section. So in good olden times itself, people wanted to avert this tax payment and they brought all these schemes. And in order to avoid this practices carried out, they have introduced these classes. Next one, distribution on liquidation. So first one, distribution of assets by the company to equity shareholders. Second one, debentures, deposit certificates and bonus shares to preference shareholders. So here also, whether the reserves are capitalized or not, the value or the accumulated profit, whichever is lower, will be taken for as a dividend. Next. Certain exception. Say what we are trying to say is that any distribution made to shareholders of a company on its liquidation. You people would have studied liquidation in company's account. Have you done? Yes or no? Liquidators final statement, statement of affairs, list A contributors, list B contributors and all that. So any distribution made to the shareholders on its liquidation to the extent of amount representing accumulated profit, that will be considered as deemed dividend in the hands of the shareholders. The rest of which you can just ignore. Next one, item number D. Have you studied this amalgamation absorption in reconstruction topic in advanced accounting? அதுல capital reduction இருக்கும். Yes or no? இல்ல நீங்க அந்த 80C மறந்த மாதிரி மறந்துடக்கூடாது. Done or not done? Not done. Okay. Now I will just create a scenario, then you can easily understand. 10 rupees shares you have a company had issued. If it were to be a proprietary or partnership form, the losses incurred by the entity will get adjusted with the capital directly. In the case of limited company, the loss will be shown separately, profit will be shown separately, capital will be shown separately. The capital and the profit or loss will not be merged. Say yes or no? Let me repeat. For a proprietary and partnership forms, the profit earned by the firm entity will be added to the capital. Whereas, if the same were to be a limited company, capital will continue to be as capital. The profit will be accumulated under profit and loss account. Loss will be shown with the negative sign, but it will not be adjusted with capital. Capital ஆவே இருக்கும். Profit or loss will be shown separately. This is the speciality of a corporate accounting. Now, what is happening is that sometimes a company can revive its business after a huge loss by taking up a project. So you can't consider that the company is bad just because it is disclosing loss. So the company would like to come out of the difficulty and to take up a good profitable project. So if they ask money with a banker, sir, please give us money to take up a project. So it will be of great help to us, is what they may ask. The company also had the past history of repaying the loans and all that, but that point of time the banker may not give, saying that our norms for release of loan is that where the company should not have loss. If you are showing loss, for loss making company, how did you give money, is what my higher ups will be asking. Please ensure that loss is written off, is what they will be telling. So what these companies will do is that they will adjust the loss against the capital of the company, and the capital will be reduced to capital. This is what we call it out as reduction of capital. So this portion is what they call distribution on reduction of capital. Any distribution to its shareholder by a company on the reduction of its capital to the extent to which the company possessed accumulated profit. See, very rare happening, but they have just put, because reduction of a capital will normally be happening in the backdrop of loss. But here they are saying to which there can be a scenario where reduction may be a case. How previously we used to have something called as, now we are having something called as buyback. Previously this buyback arrangement was not there. Now you have in Companies Act buyback. Previously Companies Act did not have buyback. That point of time they want to return the capital and they were having some profit. Such return of capital was considered as reduction of capital. See, since buyback scheme has come, people will not indulge in reduction of capital with profit there. Are you understanding? So which was a very, very old provision, and we will just learn and proceed. Are you understanding, all of you? So normally reduction is carried out when the company is having loss. Since buyback scheme has come, people don't indulge in this sort of thing. அதாவது நேர வழி இருக்கும்போது யார் காம்பவுண்ட் வால் குதிச்சு வர போறாங்க? Previously, people are just doing that. The schools where we were studying, latecomers, what they do is that they will come, the side gate video vanduvaanga. So after the side, say this is cheating business only. So when assembly will be on, some of the students, to avoid getting beating from our PT sir, they will just go through that route and sit pretty in the classroom. So yet another PT teacher will go and on rounds to check out if there were to be any students in the classroom without taking up assembly session. அப்படி பயங்கர ஸ்ட்ரிக்டாலாம் இருந்தாங்க. நீங்களாம் படிக்கும்போது இருந்ததா தெரியாது. இருந்ததா? கிளாஸ்லாம் போய் பார்ப்பாங்களா? அப்போ அசம்பிளியில இருக்கணும், அசம்பிளியில இருக்கணும், அதுல வரிசையா நிக்க வைப்பாங்க. குள்ள பையன்லேருந்து நெட்ட பையன் வரைக்கும். அப்புறமா கையெல்லாம் அப்படி வச்சுட்டு பிளட்ஜ் எல்லாம் எடுக்கணும். So the PT teacher can easily understand that these boys have come late through that side gate. So அந்த மாதிரி ஒரு provision. See, when there is no assembly, when there is no PT teacher, why the students should come through that road? They will come in the straight road itself. That is what you have to understand. Next one. Item number E. This is the one I was just referring about proprietor and partners who will withdraw monthly, 12 monthly withdrawals they will be making, but only 2 is permitted in Companies Act, and therefore to avoid this they will put it at loans and advances. So here they say loans and advances will be treated as dividend. Please go through that. இது முன்னாடி படிச்சிட்டோமே நம்ம. இது வேண்டாம். Exception, charge, year of accrual, casual income. Now we will draw the chart for deemed dividend. Deemed dividend. Okay. 222A. Here, any distribution of company's assets to shareholder any distribution of company's assets to shareholders. What is the next one? Do you remember what is the next one? B. Any distribution to preference shareholders. This is any distribution to shareholders is what I just said. Generally equity shareholders. Here, or I will put it this way, any allotment of debentures, deposit certificate, or bond bonus shares to preference shareholders. Third, do you remember the third one? சொல்லுங்க சுபத்ரா. ஒண்ணுமே இல்லையா? ஏதோ சவுண்ட்லாம் கொடுத்தீங்க, ஞாபகம் வர மாட்டேங்குதா? நான் சொல்றேனே, லிக்விடேஷன் ஏதோ வந்ததா? லிக்விடேஷன் வந்தது. அடுத்தது நாலாவது என்ன வந்தது? ரிடக்ஷன் இன் கேபிட்டல் வந்தது. அடுத்தது என்ன வந்தது? அட்வான்சஸ் வந்தது. நல்லா ஞாபகம் வச்சுன்னு சொல்லணும். யங் பர்சன், யூ ஷுட் நோ இட் வெரி வெல். அடுத்தது என்ன? இம்பார்ட்டிபிளா? சரி பரவாயில்ல, சொல்லுங்க என்ன அடுத்தது? என்ன? எனி டிஸ்ட்ரிபியூஷன் upon liquidation. In all these four cases, to the extent of accumulated profits, whether or not capitalized. என்னது whether or not capitalized அப்படின்னா, to the extent of accumulated profit ஒண்ணே என்ன பண்ணாங்க எல்லாரும், இதை அவாய்ட் பண்றதுக்கு ப்ராஃபிட்டை தூக்கி அப்படியே கேபிட்டலா மாத்திராங்க. So transferring the profit to capital by issuing bonus shares, that is what you call it as capitalization. To avoid this stringency, initially it was not that much stringent provision you were having. So people were just transferring it to share capital to avoid this. And they said, whether you do it or not. So, to the extent of accumulated profit, whether or not capitalized, it will be taken as dividend. It will be taken as dividend. Then, next important thing in all these four is that dividend distribution tax will be paid by the company. Will be paid by the company. Will be paid by the company. Deemed dividend will be exempt in the hands of shareholders under section 1034, just like any other dividend. Say once dividend distribution is paid, that is made by the company, then these items will be taken up as dividend and it will be exempt. No TDS provision will be applied. Will be applicable. இதெல்லாம் exactly opposite வரப்போகுது 222E. So 222A, B, C, D இதெல்லாம் நாலும் ஒரு ஜாதி. All these four are one bird of these are all birds of same feather. These are all four different birds of same feather. 222E is exactly the opposite. Applicable only to closely held company for advance or loan given to beneficial owner. Applicable to for advance loan given to beneficial owner or to entity wherein beneficial owner having substantial interest. Of course, to the extent of accumulated profit, whether or not capitalizing the varthang irkad parango. To the extent of accumulated profit da irukum yaar adu enachu so to the extent of accumulated profit, whether or not capital is varthanga varadu. Some exception is there in all cases. I am not taking up exception there. Now, TDS provision will be applicable. No DDT will be paid. No exemption can be claimed. That means he will be taxed in the hands of shareholder. Are you clear? So there can be a theory question possible as what is deemed dividend. Either A or B or C or D or E. So please go prepared for the theory on this particular issue.